Hello and welcome to the latest edition of The Exchange. I'm Douglas Jonas, your host, live from the floor of the New York Stock Exchange, joined today by Tim Rotolo. He is the founder and CEO of North Shore Indices. Now, as a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. Tim, thanks so much for being here.
Thanks for having me.
I want to talk to you about the landscape of uranium. What is it about that space that looked like an opportunity for you?
Sure. So if we talked 2 years ago, I think it would be a little bit different. But essentially, this is a market that is prone to booms and busts. And post-Fukushima, it was in a very deep bust. The number of companies had gone from 500 to 50. The market cap had gone from 150 billion to about 5 billion. And being a contrarian, it looked like a great opportunity. And then we started to look at what the supply demand was. And the market was basically priced for nuclear power going away. And our view was that wasn't going to happen. And so there was an opportunity to launch this product and give people access to a very efficient way to play the sector as it began to resolve that bear market and hopefully resume a new bull market.
And of course, URNM ETF listed here at the New York Stock Exchange. Tim, if you could you tell us a little bit more about how uranium and nuclear energy fit into the entire energy landscape right now?
You know, again, I think that where it sits has shifted a lot in the last couple of years, or really the last year, maybe even 6 months, with the emergence of ESG and the concerns around fossil fuels. And this, I think there's also a growing appreciation that wind and solar may not be able to solve all of our power problems. And we're seeing that in places like the UK and China and India right now, who are experiencing effectively energy shocks. Well, nuclear has the benefit of being baseload 24/7 power and being carbon free. And so we've gone from this very dire situation for nuclear power, where the US government actually had to step in and save 2 nuclear power plants in Illinois, to the French government saying, well, we're not actually going to shut down our nukes, we're going to build more. The UK building more. China embarking on a huge plan to build new reactors. And so nuclear happens to have emerged as potentially a great solution for bridging the energy transition to a much smaller fossil fuel involvement. So wind, solar, nat gas, nuclear, maybe nuclear at the center of that. But it's really kind of a great time for the nuclear power industry.
So, no pun intended, let's dig in a little further. I want to talk about uranium. What are the backdrop fundamentals? How does supply-demand look?
Sure. So it's a very top-heavy industry. It has almost a similar structure to OPEC, where there's 2 or 3 large producers in the world. The Kazakhs, they have a publicly traded company now, state-owned, called Kazatomprom. There's Cameco in Canada. And then the Uzbeks are also huge players. They drive supply. Outside of that, there's really no production outside of some, like a Rio Tinto, who has a byproduct where they produce some uranium. But in our view, there is about 125 million pounds of uranium produced per year. There's about 180 million pounds of demand from nuclear reactors. And then there's a small bit, call it 20 million pounds of secondary supply. But you still have this very large and growing supply gap. And prices of physical uranium are not high enough today to incent new mines to get built. And then add to it, you have that CapEx issue, where there's been no investment in the sector over the last decade because prices were so low that those new mines that need to be brought online, many of them are not even permitted. So you're talking about a 5 to 10 year window where everyone's just throwing up their hands saying, where is the supply coming from? And there's a new catalyst in the sector, and we can talk about that now, which is Sprott. And the Sprott Uranium Trust has launched, and they had taken over a vehicle called the Uranium Participation Corp, who is like the GLD of uranium. They have money come in, they buy physical uranium. Well, Sprott did something really novel, which is they put an at-the-market facility in place where they can actually issue shares every day and raise capital and then buy at the front end of the market. That's taking out a significant amount of supply that utilities thought that they were going to have access to. And so now we're at this point where prices are starting to rise, but you have all these nuclear power plants who need to sign contracts to make sure they can power their power plants for the next decade. And so that's why we think prices go higher ultimately.
So let's now talk about the ETF itself, URNM. It's listed here at the New York Stock Exchange. Are there keys that were important to you in the index construction for the ETF?
Absolutely. So our view has always been that you need to have some exposure to physical uranium. So there's two opportunities there in the market. One is called Yellow Cake that trades in London. The other one is the Sprott Uranium Trust. So we have 20%, 17.5% that's always going to be invested in that space. We think that's a really nice ballast. It gives you one-to-one correlation to the price of uranium, which is ultimately what this ETF is about, right? The price of uranium goes up, the equities have some leveraged upside to that. And then the other part of the portfolio, we wanted to make sure that people had access to really the most torque or highest beta names, but we need to have those producers. So we cap the producers, which are Cameco and Kazatomprom, at 15%. And then that allows more of the assets to flow to some of the smaller miners where we think there's real development potential for them to be the next producers in the next cycle. And that tends to be where the most upside comes from when you have these big uranium bull markets.
URNM, the ETF listed at the New York Stock Exchange. As a reminder, if you found this episode and are looking for other educational content, you can find a lot more about ETFs on our website, homeofetfs.com. That's a wrap on today's edition of The Exchange, brought to you by the New York Stock Exchange, the home of ETFs.